NYSE pre-market 6:01 a.m. Pacific Standard Time, 7/22/2011. BCR leading the way on the NYSE. Gap open down. Why? We're going to investigate what it's probably earnings. Caterpillar down 7. We did a special on it this morning. Missed its earnings by 26 pennies. World growth is okay, though. So we're going to be trading that left elbow there because we know what's going on and we know Caterpillar very well. That BCR, that CMI here is gapping down. So these are some of the earnings-related gap down prices on the NYSE. And they could be tied to something in the sector that gapped down. CMI is gapping down because it's probably related to Caterpillar. So as far as some of these left elbow gap downs, the CMI is always a good trade. That Caterpillar off the bottom are good trade. They're different yields because this is the NYSE. They're not high beta, they're lower beta, left elbow gap downs. And the topic of the subject today is how do we validate a left elbow gap down, that's gapping down, earnings related, and what is the strength of that gap down going to be? So let's take a look at some of the good news. We got SLB. We know that one well, gapping up $3. GDI earnings. So McDonald's came in as a Dow today, and we're right hard in it. These are all earnings related gaps, and earnings related gap open down. Trade management is to look at trading Caterpillar off that bottom and where the buyers come in. We already talked about it. We don't need to talk about it anymore. We would be looking at Deere as a left elbow gap down. These are not high yield beta type stocks. Their trade managements are a little bit different, but we cover all of these. Honeywell down 71 cents. Their earnings were so-so. So buying the left elbow gap down and knowing what that price action strength or weakness or strength at that price action before a breakout higher and or a break lower. And how do we validate that? And how do we apply risk management? And risk management always works extremely well at wholesale price levels. At wholesale price levels from the previous day's closing bell action. It is a Friday. The debt ceiling has not been resolved. There is more negative uncertainty within the broader market during this earnings season than other earnings seasons. And that's the kind of cycle we're in. So the market has been selling these gaps consistently, as you were told a week ago before the earnings season was going to start, that the overbought gaps selling in short to the news, that's where the public was going to come in and be all bullish about it. That, okay. But right now, because of the uncertainties and things that are out there, the trade management part is quite opposite of what their thinking is. That's the part of the thinking you don't want to be involved in. What you want to be involved in is knowing what the trade management is and why we're selling short up at the high on buy the rumor, sell the good news, and where the markets are, and what this particular July earnings season of 2011 is really all about. Welcome to the NYSE.